Hello, teachers and students. Taking a look at something, and I think today, this is Todd Bubba Horwitz from BubbaTrade.com. Today, I want to talk to you about the different asset classes and why we look at certain things and some of the ways to be most successful as you're looking to trade. As we look across the board right now, we see that the equity market is starting to be under a little bit of pressure. Some of the big stocks are starting to see some major pressure. Some of the fundamental data that we're starting to see is telling us that there's some issues in there. We know that we don't have much growth in this country. We know that the jobs are not very good, even though they're telling us that there's job creation. But when you see a market starting to turn and you're looking, you always want to have your assets working for you. So I think now what you do is you look for spaces that might be good to look for holding spots that would create enhanced yield for you as an investor. I think now it's time to look at the commodities space, as the commodities are now on 18-year lows based on what we call the Bloomberg Commodity Index. When you take a look at gold, down near 3, 4, 5, 6-year lows. You take a look at the grain markets, which are the way they're called soft commodities. They're down at dramatic lows here. So anywhere along that commodity space, gold, oil, soft commodities like soybeans, cotton, those are places that you can use as investment classes for yourself. You do the same work, and the interesting thing is the charts that we look at for equities are the same charts we look at for commodities, because at the end of the day, all charts are the same, all markets work the same, and they all use the same basis. All we care about is what does the chart look like under time and price, and if it looks like it's at a support level to buy, we'd want to be a buyer. But I think now would be a great time from an investment standpoint to buy some what we would call hard assets like gold, and then some soft commodity assets like oil or the grain space, something in those neighborhoods that are at great levels of support. Just a little bit of knowledge that you can start to look at. I want you to start to expand the horizon of things that you look at, because at the end, what we're really trying to create is an endowment compounding model that helps us increase our yield, increase the money that we make so that we can retire when we're younger. That's how I see it for today. This is Todd Bubba Horwitz coming to you from the CME Group in Chicago.